public holiday. But gentlemen, what do we think about what the MPC meeting, the outcome is going to be for Wednesday and Thursday?
Essentially, on our own part, we're not seeing anything changing. They've actually aired that down for a while now, so we're still not seeing that changing. So the only part you're looking at is the fact that CBN has actually been trying to keep much of the funds maturing into the market, so they're trying not to see as much outflow as we've seen in previous months. So I think for them to actually do that, they've actually hiked up a bit of the T-bills rate, and normals have also gone up. So we think the MPR actually become just an anchor rate, so we're not seeing much happening to that, but we believe that CBN will continue to kind of tweak up the T-bills rate and normal rate to keep funds within the, so you just keep investors interested in the market.
So it's a liquidity issue.
Yeah, it's actually more. So another thing you're looking at is the possibility that they might actually hike the CRR for banks. So you're seeing a lot of outflow, maturing bills are actually coming into the system over the end of this year. So just to keep those funds not chasing the FX and not to distort the FX market, you might actually see CBN raising the CRR to.
That's the cash reserve ratio,
yeah,
correct?
Yeah.
Ugo Dre, what do you think is going to happen with the? What's your thoughts on the MPC upcoming MPC meeting?
Yeah, there's a lot of discourse out there. A lot of people believe that the CBN is going to be a bit hawkish this week. I mean, a lot of this dovetail from the minutes of the MPC communique that was released earlier this week as the last monetary policy communique. But I don't think anything much is going to happen. I think the CBN is just going to hold rates for now. I think they still have another window to maybe increase maybe the next MPC. But for now, I think they're just going to hold rates. Remember, December season is coming. I think there's going to be some influx of FX as well. They probably want to see how the Eurobonds perform. So I think they're just going to hold rates.
All right. Thank you for mentioning the Eurobonds, because that is where we are jumping into next. Gentlemen, our latest issue. Emmanuel, you're going to take us through our latest issue for the Eurobond. Let's go through that. There's been talk that the rates that we're seeing for the Eurobond have been a bit higher compared to the February issuance. Yeah. Take us through that, please.
Okay, so for us, we think the higher pricing just reflects the ongoing emerging market risk emanating from the recent hike in U.S. interest rates, which has resulted into higher treasury rates in the U.S. So we see in the U.S. we've seen rates has expanded by 70 basis points year to date to 3.1%. In addition, we've also seen currency. We also saw some currency issues in some emerging markets economies earlier in the year. So this just basically just translated to an higher premium that this investor just demanded on our Eurobond issue. So when we check the issuance, we saw that compared to the previous issuance that we did in February, when you compare the spread to US yields, the previous issuance was about 460 basis points, 460 basis points compared to US yields. But coming to this issuance, we saw these investors just demanded higher premium. So we saw a spread of about 563 basis points.
So that is when you talk about the basis point, that means the rates. Let me see now. It was 7.6% for the 7-year, 8.75 for the 12-year, and 9.25 for the 30-year. Those rates compared to the U.S. Treasury bills, the rates are wider.
Wider, exactly.
Okay, and so that's because of the whole. You're saying it's because of the emerging market risk of that we're seeing. Okay.
So essentially, investors are not just pricing in the current trades that we've seen so far. So they are still pricing in a possible rate hike that might actually come up in December. So the Fed's actually guided to that there might be another 25 basis points rate hike in December. So a lot of that is what they are looking at. So the U.S. economy remains strong. The job market is looking good. The economy is growing. So there's likelihood of higher inflation going even into next year. So a lot of that is what has actually been priced in by investors. That's why we are seeing this higher premium on what is actually being issued. So I think for the 12-year is as high as 489 basis points compared to as low that for the 30 years as high as 489 basis points. That's compared to 456 basis points that they did on the 20-year that we did in January. So it's actually a high.
So investors are saying, hey, Nigeria, America is looking good. I'd rather invest there, but if you really want me to give you my money, you're going to give it to me at the higher rate. Ugo Dre, how do you think this is? So essentially, this is more expense for us with what we're looking at as far as borrowing is concerned, as far as the Eurobond.
Yeah, it's more expensive. We're paying a lot more. And the premium is quite higher than a lot of people had imagined. But I guess what's going on is that, just like we had mentioned, the Fed rates are going up and the US economy is stronger. There's also a lot of pressure in emerging markets. Emerging markets outflow going on now, especially when it comes to foreign portfolio investments. So I guess the CBN is a little bit fidgety, and CBN also wants to keep that external reserves level at about $40 billion. So they don't want to take risk. They don't want a situation where they put out. I think it's probably better that you put out Eurobonds at a higher get the kind of demand that you expect. So by and large, it's bad for Nigeria anyway, because that's higher interest rates that we're paying, especially in the market where interest rates are a little bit contained. But I mean, what can we do?
I'm glad you also, Ugo Dre has been giving us segues into our topic. So you mentioned the CBN Dollar Reserves, yeah? Segun, go ahead.
So I think the two things when you're looking at domestic foreign borrowing, to an extent there is a saving come from foreign borrowing. Because when we did our estimate of this one compared to we had issued the same amount of 800 billion locally, so we're looking at a savings about 61 billion naira in savings in interest. So to an extent, it actually saves us a bit compared to what you'll have done locally. Then what I think on the reserve, there's also an impact of this. So we had actually estimated that the reserve will have actually gone down to about 38 billion by the end of the year. So we actually, over the next 2 months, we have as much as $4.3 billion in maturing T-bills, almost and T-bills.
We have to pay back.
Yeah, that foreign holdings of our maturing T-bills is made at about $4.3 billion. And what we've seen over October is as much as 80% of that actually went out. So we're looking at if that much is actually going to go out over the remaining 2 months of the year. That's about, let me say 80% of that, that's about 3.4 billion leaving the reserve. So with this coming in, it's actually going to cushion the effect of that outflow. And also with CBN also raising its rates, we believe that CBU's rates and open rates are also likely to go up. So we believe that a lot of this will actually be able to consolidate what we're likely to see for the reserve at the end of the year at about $40 billion compared to our previous estimate without the Eurobond of $38 billion.
All right. So Lagos, if you're just tuning in, we've talked about the upcoming MPC meeting on Wednesday, Thursday. We're also going into the latest Eurobond issuance for Nigeria, borrowing more money. What is the outlook, Segun and Emmanuel, for our scope of borrowing for going forward as far as the deficit and funding that? What are we looking at with that?
So at the beginning, we actually estimated fiscal deficit to be 1.78 trillion naira.
Okay.
So this is split into about 850 billion naira on foreign borrowings, while we estimated 380 billion naira on the domestic leg. So year to date, the government has borrowed about 173 billion naira. So we're just expecting the government to just do about 50 billion November, 50 billion naira December, and the possibility of a Sukuk bond, 100 billion naira. So when you compare this 50 billion to monthly average of 87 billion naira, so this just translates to lower borrowings. So on the fiscal leg, this should just limit the upside to higher yields. However, we're expecting we're expecting a very high liquidity maturity over the rest of the year.
Okay.
So we just believe the CBN will just higher more rates to just limit
limit that. Okay, so if going forward, you're saying the borrowings are going to come from the local end?
Yes, local end.
Okay, so what about the whole dance about rates now going up if we're now coming back into the domestic end to borrow more?
So like we mentioned, there's going to be lower borrowing going into the rest of the year, but you are still looking at a sizable liquidity in the system. Also, we are seeing what is happening to these foreign portfolio investors that are actually moving a lot of outflows out of the country, which are actually been affecting the reserve. So to cushion that effect of the outflow, that's why we are thinking the CBN might actually hike the OMO rates slightly, and also the TB rates to keep those funds within the Nigerian economy.
Good stuff. All right, Ugo Dre, I'm coming back to you. This real quick, just I think follow how much time we got, but about a minute. Okay, Ugo Dre, a minute. CBN has announced a 60 billion naira subsidy for rice. Ugo Dre, should we give up on this whole rice project, or do we keep pumping money into this thing? Where are you with it?
Well, I mean, it's a signature policy drive for the federal government, so it's very hard to get them to stop pushing for local rice production. I think they've made some headway over the last 3 years, not as much as we expect. Make no mistakes about it, Nigeria imports a whole lot of rice.
Right.
And I think that at some point we need to be able to kind of mix this up with local production. Now, do you agree with the way the government has executed its own plan? Probably not. I also don't really believe in having subsidies because we are just not good at subsidies.
Right.
Now, subsidies is not a bad idea, in the first place. It's just that in Nigeria we're very bad at executing subsidies. So you ordinarily want to say, look, don't do subsidies here. Rice import has actually dropped. I mean, there was a U.S. government
the report,
USDA. I don't know where they got that from though, because if you look at the core countries where we actually import rice from, rice imports have actually dropped from at least from Nigerian side, even though a lot of this rice finds its way to Benin Republic and back in there. But even if you aggregate everything, I don't think it's up to 1.5 million metric tons. So that report is kind of suspect.
Okay.
But nevertheless, we still import a lot of rice. I think that we need to have a lot of local rice production. I think these are just low-hanging fruits that Nigeria can actually latch upon. But how the government is executing it is where I have a problem. Subsidy for rice is not something I think.
No, it's not really.
We're just bad at subsidies.
Folu, that's it?
Yeah, pretty much. We've got 20 seconds left, in which time I'll read out Benga Amu's message, who first of all says, welcome back, Rotus, but nothing will change with the MPC. I also wonder why the meeting is held at all, since nothing had changed.
We still have to have the meeting, but thanks.
Thank you very much, gentlemen, for coming in. Lagos, do stick with us, because coming up next, we're talking about what your hustle is. Let us know. Send us your messages to our WhatsApp number. It is 0809 444